It's been reported by German media that Porsche will have to write off $20 billion in losses thanks to its tie-in with the Volkswagen Group. And apparently there's also an additional €2 billion write-off. That means that instead of making a profit for the first time in many, many years, the Porsche Group will actually make a significant loss by the end of this year. Obviously, this will have a huge effect on Porsche stock price. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching The Electric Viking. Great to have you with us. The collapse of the Volkswagen Group appears imminent. Porsche is being affected by this. Porsche sales were down 42% in the third quarter of this year. This is a crisis that is going to engulf potentially all of Europe. The automotive industry is very, very much entrenched in Europe. Without it, Europe will lose, potentially get to the point where their GDP may even start to fall. Now, Spiegel, which is a German publication, has reported in German language, now I'm translating from this, so it's not going to be a perfect translation, that they'll have to write off billions and billions of euros. Car manufacturer Volkswagen is in the midst of a deep crisis, says the German media. The holding company Porsche SE, which has a fair investment in the Volkswagen Group, will have to write off enormous sums on its holdings in Volkswagen. The amount will be around 20 billion euros, or around $22 billion US. The holding in sports car manufacturer Porsche AG is also expected to be subject to write-offs of up to 2 billion euros. The listed holding company of Volkswagen's owner families Porsche and Piech announced on Friday. So just within the last few days, Porsche themselves have made this announcement that they will have to write off more than 2 billion euros worth of investments, and that will affect their bottom line this year as well. Not just their bottom line. I mean, that's going to affect their ability to invest in the future, their ability to easily get low interest loans, which is what car manufacturers need in order to keep on building cars, keep on manufacturing. Huge amounts of money are needed. This is driving Porsche SE deep into the red this year, says Spiegel. The profit forecast, which was only reduced in September by $1 billion to between 2.4 and 4.4 billion euros, is no longer valid. Porsche themselves said their profit forecast has been cancelled. They won't be making a profit. They said, this is a direct quote from Porsche, it will be significantly negative. Then they did go on to say, though, that don't worry, the owners, they'll still get their dividend. The dividend just won't be as much as usual. I don't know how this could work. I mean, it seems insane. Volkswagen, though, is in crisis, say the German media. The owner holding company justified this move with a lack of planning by Volkswagen. Basically, Porsche is blaming Volkswagen. Volkswagen postponed the planning round in November due to the dispute over the announced savings program. The tug of war over the future of both companies, Porsche, Volkswagen Group, and the many brands underneath them, is hindering the group's plans for the next few years, on which the valuation by the major shareholder is normally based. It is no longer expected that the investment plans of Volkswagen Group and Porsche Group will be approved before the end of the year, especially because so much of that depends on what the unions have to say about it. Now, apparently what's going to happen here is Porsche SE will have to resort to external valuations. In other words, they're getting external valuators to come in and try and sort the mess out. Remember, the ownership structure of the Volkswagen Group, of Porsche, and everything else between them is incredibly complex. I mean, some YouTubers have tried to explain it, but it's still complex. It's so difficult to understand. What this means is the result is a devaluation of 7 to 20 billion euros for the share in Volkswagen Group and around 2 billion euros for Porsche AG. Now, Porsche not being particularly transparent here, I don't really understand the $2 billion write-down for Porsche. What are they talking about? Are they talking about the 40 dealerships they're closing in China? Are they talking about something else? I'm not sure. The Volkswagen Board of Management has been wrangling with employee representatives for weeks over deep cuts in production and the desperate need to close several factories. Initially, it was believed to be 2. Then the CFO said it might have to be 3. Porsche SE continues to support the entire Volkswagen Group in achieving its strategic goals and remains convinced of the long-term value enhancing potential of the core investments, said Porsche SE. Critics accuse the struggling automaker of having slacked off on the development of electric cars, among other things. And to be fair, it's true. Federal Minister of Economics Robert Habeck also recently called for more efforts from Volkswagen. There must be offers in the area of electric cars for around 20,000 euros that everyone can afford, said the Green Party's candidate for Chancellor on Friday at a Handelsblatt event in Berlin. Your name is Volkswagen, not luxury cars. So internally in Germany, there's the belief that Volkswagen Group is charging too much for its electric cars and intentionally doing so because it loses money on all of them. Even if it were to discount them, it still loses money. This is pretty accurate, to be honest. I mean, look at the price. The average transaction price of EVs in Europe has increased. It's the only place in the world where over the past 12 months, the average transaction price for an electric car has gone up. Why? I mean, battery pack prices came down by 53% over the past 12 months. The most expensive part of the car, by a mile, has come down in price, at least the cells have themselves, the battery cells themselves, by 53%, from around 90 something US dollars down to 53 US dollars. Now that's BYD, that's coming from CATL. The major manufacturers have released that data. That's just not some made up media number. And yet, Europe is selling EVs at higher prices than ever before. Not the case in the United States. EV prices have fallen. EV prices have fallen in Australia. EV prices have fallen in Thailand. EV prices have fallen in China. Pretty much everywhere you look, EV prices are falling, but not in Europe. Is the Volkswagen Group partly to blame for this? Well, this is a question I have for you as an audience. If 90% of the cars that Volkswagen Group made were electric, fully electric, and 10% that they made were petrol, how much would it cost to manufacture those gasoline, petrol-powered cars? Well, Moore's law says that for every doubling of production, the price reduces by 20%. What this means is that because Volkswagen only made small numbers of EVs, the cost of production is still quite high for them. Whereas other manufacturers like BYD and Tesla and other Chinese manufacturers, because they are making such large numbers, they can actually sell them at a profit. So the Volkswagen Group is blaming China, it's blaming electrification, it's blaming people, apparently according to the Volkswagen Group, saying that they don't want to buy EVs, when we know EV sales worldwide have grown by 26% over the past 11 months. So the demand is there. But for some reason, Volkswagen's EV sales this year have actually gone nowhere. In fact, they've decreased versus last year. Now the group is in a crisis. They have more than $190 billion in debt. They're closing factories. They just sold a factory in China. They're having to close other factories around the world. They just tried to attempt to sell an Audi factory in Belgium. In my opinion, this story is playing out in a very similar way to Nissan. Let me know what you think in the comments.